In any business, especially real estate, time is important.
Whether you're marketing your home in an up, down, sideways or flat market, time is of the essence when you are going to sell your house. In the beginning, be willing to market and sell your house over the next 1, 3 or 6 weeks, whatever it takes. Remember, the house you are selling is not the house in which you are living. We'll get to that later. Also, remember that the time you invest preparing and marketing your home will pay back many times over.
What should I bear in mind?
History will also repeat itself in real estate. Remember, real estate markets tend to take the stairs upwards and, unfortunately, take the elevator down. What we're looking for is the fact that the population in major centers will increase, and people will need a place to live. In hindsight, we look back and see that history repeats itself in the stock market, real estate markets, and even in the way political history and dynamics move from country to country. You should also learn real estate cycles. Recognize that real estate cycles occur approximately every 10 years. For example, look back at the Canadian real estate market right at the beginning of the century during the 1900s, not the 2000s. The average price per home has doubled about every 10 years in a slow market. We also have to relate that to the buyers. Ask yourself, would you like to buy your parents' home or your grandparents' home for the price they paid for it? Of course, the answer is yes. You should also show buyers the alternative. Show people that they are paying X dollars for a property right now, but where will it be in 1 year? It could be down. What's your alternative? Rent. You're going to have to live somewhere. Let's get into a property now.
What are other considerations?
1. Move up in a down market. Okay, as sellers, we tend to forget about the discount. The price is lower right now that we could have received a year or 2 ago. We didn't sell. We didn't realize that capital gain, that appreciation, that hike in prices. Well, the past is the past. For those of you moving upward in the market, this is actually a good deal. Your prices dropped approximately 10, 15 or 20, but so have the higher priced properties. Ultimately, the time to move up is in a down market. You save proportionately more money by moving up when the market is slow. On the other hand, prices are down. You need to sell the home. You're not moving up, you might be moving down. You may be liquidating. What can you do? 2. Apply other strategies. Don't simply sell the home for what you can get for it. Take a look at some of the other strategies we discussed, such as rent-to-own, seller financing or co-ownership, and how these will yield you top dollar. 3. Consider your needs and wants. Remember the needs of your family, your business model, your investment properties, your goals and your dreams. The quality of your life trumps the desire to get the highest price for your property. In other words, you may make a little less, but you get to move on in life.
How many buyers does it take to buy a house?
Well, obviously, it only takes one. When you're speaking to other marketers and other realtors, you need to realize that we need approximately 100 people considering your house/condo to buy. From this number, there will be approximately 10 qualified buyers and 1 solid buyer. Despite all of the doom and gloom, there's always a buyer for a well-kept home offered at the right price and terms.
Okay, let us meet again next time to discuss the necessary steps to selling on my own.